Adam Jonas from Morgan Stanley released another note and forecast for Tesla stock. This note was titled, "Where's the Next Price Move?" And it outlines their belief that while Tesla may have achieved its iPhone moment, the App Store moment is soon to come. Now, this is when Tesla moves beyond just selling cars. Tesla will soon see other services like software, content, and licensing play a bigger and bigger role. When this happens, Tesla will see higher margins, higher multiples, and higher recurring revenue as it enters into a $10 trillion total addressable market. So today we'll review the Morgan Stanley report in greater detail. And we have Jan with us. He has a YouTube channel called Tesla Fix, and he gives a really good report and research on the German activities of what's happening with electric vehicles. Thank you so much, Jan.
Thanks for having me again, Herbert. I'm always glad to be on your channel. It's pretty nice to talk to you always. Yeah,
I love it too. And so this is a big topic. It's Morgan Stanley. We love to cover Adam Jonas. He has very good, unique perspectives. So let's dive deeper into what he's saying. So this was released yesterday, November 6th, and it says Tesla at 215. Where's the next price move? And basically, macro aside, for the shares to avoid the next price move going down, investors must gain confidence in the company's ability to grow earnings and address new markets, both within and beyond core auto. So yeah, we know that that's the case. Investor sentiment is low, but that's not enough by itself to halt the negative momentum. So what they're saying is that the TAM total today is totally dominated by its point of sale auto business. And core to their overweight thesis is the ability for Tesla to move the needle incrementally towards more capital light models and incrementally away from auto business, basically growing its service revenue. So what they point out here is over the next decade, they need to show that they've got revenues from software, content, and licensing opportunities. Maybe later we can discuss a little bit more what that could look like. And then what's beautiful, what they did was they showed kind of how many cars are actually out there now, not just the number of cars they're selling per year, but how many Teslas will be there so that they can build on top of that. Yeah. So let's see. Yeah, here it is. And I'll show this chart later again. So this is parc, which is I believe it's a French term for, basically all the cars that's currently in a certain region. And so you can see that for Tesla, we're going to get to about 20 million by 2030 here. You're going to see 20 million total cars that's out there, and that serves as a base for software and services. Any thoughts on that?
Absolutely. So this is pretty interesting to see because I think in the market, or what we see in those near-term news cycles we always witness, or the FUD that's going around Elon and stuff like this, people seem to be diluted from the fact that Tesla is playing 4D chess here, actually, because the vehicles they produce is the platform on top where the software lays. And the approach of Tesla is totally viewing the car as a different kind of thing. It's not about the car, it's a computer on wheels. Elon said that like from the beginning of Tesla, more or less. He always pointed that out over the years, and people kind of don't really listen. And I gladly accept that now Morgan Stanley here has this great report that, yeah, actually, this is a huge deal. If the Teslas that are going around, this just means like it's just hardware. How much hardware do we have? And then they can lay on top of that, of course, all these nice services that they have. For example, FSD is a huge deal. This will change mobility like crazy. I'm not even sure if people could model that in. How can you model that in? I mean, it's difficult to see the trajectory there. But if you look at overall the whole numbers and how the market is developing, FSD will have a substantial impact on the business of Tesla, because all of this is just an update. You have to keep that in mind. The cars are prepared, all the cars from 2018 comes with hardware 2.5. And since then, they can operate with FSD as well. That's why some leasing companies even, or also Hertz, getting into the business and buying more and more and more Teslas also prepare for the future to operate a robotaxi fleet. Especially in Europe, for example, we have Mr. Green, which they also bet on this bet already. So there are already companies that bet on this area that Tesla provides just the cars as a platform, and they're gonna sell FSD on top of that and make huge revenue about that. And the value, of course, of FSD will significantly rise when it's solved, because already the beta is already super valuable for many people. That's why they use it. Of course, we've seen some demand, like stagnation of adoption rate of FSD. That's why they lowered the prices. But hey, Tesla can do whatever they want. They can lower prices to 5,000 euros. They can or dollars. They could lower prices even to 1,000. They wouldn't do that because it's much more valuable. But you get the point. That's their leeway and their leverage that they have with their cars. And like the chart you've showed with the 20 million cars on the roads in 2030, around 2030, yeah, that's their base. And every car since 2018 actually, with the hardware 2.5 can operate on that. So
yeah, that's a very good point.
Huge upside, especially
huge
also.
Upside.
Sorry.
Yeah, we just it's a good reminder to us that this is out there as an asset. The question for us is timing. When would you be able to start showing licensing or software? And obviously right now, especially after the earnings, there's a softening in the investor sentiment. So we've got these 4 things that Morgan Stanley believes is necessary to stop the stock slide and improve investor sentiment. Number 1 is stop missing numbers. Number 2 is execute the model expansion beyond the current lineup. Expand the TAM towards the capital light business, which we'll explore shortly, which is the software services, licensing, and then change the narrative to be more about AI. So the stop missing numbers part, we basically say that, the earnings per share is compressed and it's going to stay compressed for 2024. And so this is kind of, but they have to hit the numbers that they've already said, otherwise they'll keep falling. The model expansion, the Cybertruck, has been because the Cybertruck bar has been lowered because of just the dampening of the expectations of what we're going to get there. But it's still going to be. I think we should not underestimate the impact of the launch of this to change the sentiment. And then this is the business right here: expand the TAM towards more capital light businesses. So over the next 6 to 12 months, that's what they're saying, we'd look for further evidence of the business model towards more capital-light projects, licensing, software. So let's pause there and you tell me, because I think there's a conversation to be had here. When do you think you're going to expect a licensing or some sort of event that can show that this is not just a hardware company?
I would say the licensing would be the first thing that we're going to see, as well as developments in AI with their assistant they are doing with Grok. Actually, I'm pretty bullish on Grok, on the thing XAI is doing actually, and all of the companies of Tesla kind of benefit each other more or less. Tesla has a track record of doing this. We've seen that time and time again, that they also lend workers from the companies to each other, or also the possibilities kind of are endless in that segment, that they could put Starlink into the cars as well. It's going to happen. That's what I assume as well. So we're going to see much more leeway with all those synergies they are like they're having under the X Corp mothership, you could say. So, but software really is the key factor here. I could see the assistant already being launched pretty early. It could be next year, maybe. That's what I could see, that you have your assistant on your car. The pace that their language model is improving is pretty steadily. And for FSD, I'm not as bullish on that. That's why I think they also look into this. But the timeline for FSD, for me, at least with the newer version, the FSD 12 version, where they don't really rely on hard-coded parts, but the AI really taking over here and writing code while it drives. So the code lines are actually pretty low. They still have to train their model more and more for that. And I think it's going to have some hurdles, but I could see at the end of the year, maybe that FSD comes more and more into the picture, that regulators will jump on it, and that regulation will be set as well, that way. But I think licensing, like you said, licensing is a huge deal. They've also licensed, for example, or they shared the product of they had this deal with BP, for example. This is a big sign for Tesla, not from the software side, but to partner with different companies and also helping companies with software. I can see that as well. I think they're going to announce also some partnerships as well. I think Ford integrating the charging standards, or all the companies integrating the charging standard, kind of, they need help to have this this piece of software, or this API thing working and everything. So I think Tesla can help those companies as well with software, and there could be potential revenue streams down the line there, I would say.
Yeah, so I'm in line with you here. So FSD is probably going to be a lot longer than people realize. The reason is because the big three auto here in the US, they're just going through their union scenario. So I'm not sure that they're going to be ready to make this announcement at this moment. And FSD version 12 needs to come out first before I think something like this will happen. Some people are really expecting that there's an FSD announcement shortly that could happen at any moment right now. But what I am very bullish about is licensing of software, especially with the last couple of weeks with all this capitulation by many car companies talking about how they're slowing down their production and investments in EV. I think some brand will come out and they will say, okay, we're going to partner. And the reason I say that is that when the Ford CEO was talking to Elon, talking about the partnership with Supercharger, Elon said twice, maybe even 3 times, and said, hey, we'd like to you should license our software as well. I think that the software licensing within the car can happen very quickly, and there'll be some brand that will be saying, hey, we're going to do this now. So this is the part that Morgan Stanley says that the iPhone moment has been achieved, right? That's when the car came out. It's like the iPhone. It revolutionized electric vehicles. It's highly desired by the consumers. Great brand. But it can reach the App Store moment. That's when iPhone really took off, when Apple stock started just skyrocketing, because App Store was when software and services showed that it was going to just rival the hardware business of Apple. And so this unlocks high margin, high multiple, highly recurring revenue. And I made a mistake, actually. They forecast that Tesla's on-the-road fleet, it's going to be 34 million by 2030. I said 20 million. I looked at the graph and I thought it was 20, but it's actually 34 million. And this is their forecast. So based on that, they're going to they could basically make assumptions on the attach rate that derives our revenue built for the Tesla's network services. This I think I misread this earlier. It's 34 million. And then So this is their breakdown of why they think that their price target is 380. Their bull and bear cases. Bull is 550. The bear is 120. And the 380 is comprised of $86 is for the auto business, hitting 7.4 million 2030. That's very low. That's very, very, very conservative to say that Tesla will only sell 7 million cars per year. And then margins of 16.9%. Tesla Mobility, I guess that's Robotaxi, $82. I think that's really low. This kind of cash flow, $1.08 per mile, very low. Tesla as a third-party supplier is $41. It feels very low what they're attributing to this. And then energy at 48, insurance at 8, and network services, this is the big one, I guess, network services at 115. Any thoughts on the breakdown here?
Yeah, I think it's interesting to see how they viewed and valued different kinds of parts of the business. I would say when FSD is solved, that's a huge deal. And I would say that it would be much more than $80, I would say. So this has a way higher potential that they are estimating, but I get why they are more conservative. And I think it's also the better approach not to be as bullish on everything. I think it's good that they're a little bit conservative, but I would disagree with some of the things. Also with the licensing, it's potentially that it could be a huge upside for Tesla as well. I mean, also there are different areas where Tesla could provide value here for different companies. I mean, software is the one key thing that I would say that even Apple couldn't really tackle. I mean, they're still at it, try to get. They've showed some interfaces and everything. Had a presentation about that, but I think Tesla is the key player here. And now with so many car companies going into their ecosystem with the charging standard, means that at first it starts with an API, but where does it end? Will they see, okay, God damn it, the software is so complicated. How about we license some hardware? And now consider, software, license some software. Let Tesla develop the software for our cars. And also look at the hardware side, licensing of hardware parts. How about FSD? You want to run FSD on your car? How about you take the approach that Tesla did? They're going to provide with the cameras, with the stuff they can provide them with, and with maybe the computer as well, with the onboard computer. And suddenly we have a partnership with another car manufacturer, because Tesla's in such a dominant position right now in the EV space that they can kind of leverage everything, help the other OEMs at some point. And I think they're going to do that, because Elon stated very, very often that they don't want to crush every competition that's in their way. They need to work together to finally reach the goal of replacing ICE cars with the rest, with EVs. And that's why I also see that Tesla just opened the floodgates for licensing. And I think this is going to be a huge factor. And I would also count this a little bit low in the share estimate for Morgan Stanley here. That
very low.
Very low. I mean, they're very conservative with that. But sometimes you need to be more conservative, especially in a market that we are going on right now, where the economy is kind of stagnating and everybody's a little bit cautious with investments and everything. So Tesla would be the only option, because they are very cost competitive, and if they're gonna make a good licensing model where they gonna leave some revenue for the car manufacturers on the plate and be fair, then I would say it's gonna substantially skyrocket.
So we have to look at the fact that how likely is it that Tesla's going to be able to make the move beyond hardware into software, and it's very, very likely. Who are the competitors? Who are the alternatives? When Apple came out with their OS, then you had Android was equivalent, but there really isn't an Android version. I've been asking this question to many experts. Then maybe it's Google, maybe it's Apple, but that Volkswagen's Cariad had major issues. Ford doesn't have this skill. The Chinese don't have this. And now that you add Grok to, just another component of how to make this whole end-to-end solution to be able to speak to your car and have it control things to you, it just becomes so much compelling for other car manufacturers to say, yep, I've got an incredible brand. I'm going to outsource this to Tesla. It may not be the big players right away, but certainly some of the small players, they're going to land in here. I want to show this last.
Sorry,
go ahead.
Add something here. I think that's also very important, that with the Grok and with the AI they're putting out, people underestimate, or also Morgan Stanley underestimates here, the ripple effects of those areas working together. Because if your car is capable of getting high quality voice commands, giving you great feedback, remembering what you talked to the car about and stuff like this, remembering your places you want to go, and drive me home, drive me there, do this. I think the ripple effect will be the car sales will also rise again. The demand will rise again. That's the thing. That's the thing that they didn't really calculate in. I think the ripple effect between those things that makes a better user experience. Everything that makes a better user experience is. Yeah,
that's a really good point, actually.
Design and everything. User experience.
I didn't even think that myself.
Factor here.
Yeah. So adding Grok capability into a Tesla car, all of a sudden, is such a huge value prop.
Exactly.
That is not existing today. That why would you buy another car if this car can be, just all sorts of things you can do with it. Okay,
What
so
you gotta
just
use Siri, it's not
right.
working, yeah.
Siri's promise never came out, but Grok has a higher chance of really becoming that promise. So this is a weird slide that Morgan Stanley had. It's really silly. I can't believe that they would release this, but basically talks about how if Tesla today is down here, asset heavy, creating cars, manufacturing heavy, and it's the auto business only, it's a $1 to $2 trillion business. But there's 10 trillion available if they can do non-auto third-party licensing of the software and content. They even, I don't know what they mean by content too, beyond auto. And so that's where Tesla needs to move towards. Asset light, meaning it's just software, it's high recurring, high margin, but it's 10 trillion. And so again, it's curious why they're very bullish about the market, but they don't, their price target is very conservative. And I think I had somebody answer this before, that they have to keep their price targets very, very low. But that is like just something that they can't do. So you have this weird thing where they're going to say this massive potential, AI, Dojo, now licensing, but yet very conservative price targets. Still appreciate them recognizing that this is a big deal. And I think that it is a big deal, and it's just a matter of time. The question is when. Is it this year? Is it next year? But it will happen. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.
Absolutely. I also agree there. And I think the report is on the right track, you could say. I would say it's way too conservative, but that's my opinion on this.
Yeah. Awesome. Thank you, everybody. Please follow Jan. He's got his own YouTube channel, Tesla Fix. Thanks, everybody.